Well, hello everyone. It is a Thursday, the 27th of February, 2025. I am Delbridge, Benchmark Realty, Murfreesboro, Tennessee. This is your status chat, and spring is in the air. Well, it must be because my eyes are itching me to death. Let's get to it. If you like this content, please go to CallDelToSell.com, find the tab that says on YouTube, click it, and it'll open up a page of QR codes. There you can use a smartphone to scan and get to the YouTube page, or you can just mouse over and click it on a PC. There you'll be able to subscribe to this little button over here and click the notification bell so that YouTube will notify you when each Friday's blog has been uploaded. Thank you. All right, the first tab I have open for you is from the U.S. Census Bureau, February 26, 2025, which was, if you're any judge of calendars, was yesterday. All right, and we see the big news here is new home sales. This is 10.5% below the revised December rate of 734,000 and is 11% below January 2024 estimate of 664,000. All right, median price went up, looks like. The median price of new homes in January was $446. The average price was $510. For sale inventory and month supply, the seasonally adjusted estimate of new houses for sale at the end of January was 495,000. This represents a supply of 9 months at the current sales rate. So that does not sound encouraging. Let's look at mortgage rates. Well, they are encouraging. Look at that. We go to our old friends at Mortgage News Daily, and because this is daily, we get the noise along with the actual data points, as reminding you that the blue line is Mortgage News Daily, daily rate, daily survey versus the weeklies of Mortgage Bankers Association and Freddie Mac, the government-sponsored enterprise. And all of these are showing a movement in the lower direction, although it's only like 0.25% within this range for most of them. Maybe a little bit more on the daily, but about 0.25 point since when? Since about January. So it's not moving really quickly, but we are moving in the downward direction. Let's look at some economic news in its total. From the Bureau of Economic Analysis, also the government, the GDP came out. When did it come out? Just recently, February 27th, which would have been today. It says that the GDP for Q4 is preliminarily estimated at a little more than 2%, 2.3%. This is down from a year ago when we had Q4 of 2023, which was higher than that at 3.1%. So if we take our number from here to here, we are on a downward trend on the GDP. Now, we also do have a little bit of some seasonality. We know that summertime, the mid part of the year, when it's warmer and greener, that's when all the good stuff starts to really come to be, including selling of houses and buying of houses, are in the second and third quarter. About the third week in April is considered by some to be the peak month. So we expect to see some of this rise, but it is going in that direction. You'll have this note available for you in the description of the status chat. What about consumer spending? Well, that's not going in a great direction. Well, it is if you own a business and they're spending with you, but if you're a debt holder, your consumer spending, you're still spending more than we were before. And it's accelerating. Look, we had it sort of down until when? Until the election period around November of 2024, when what did they do? They cut the rates when they really shouldn't have. They cut it by a half, and we had the usual people screaming and hollering, we want more cuts, more emergency cuts. But they cut the rates when inflation was still high, and it resulted in more spending and higher costs and more inflation. And you see that we're spending more in the quarter of last year, the last quarter of last year. We actually went up from 5, 6, 7. We're on an upward slide of consumer spending. Again, this one will be available for you to read. You can look at the interactive data. You can ask your questions. You can see the methodologies, although it has changed, I think. But let's get on to our next one, the CPI. Now, we've heard on social media, my social medias are full of people that know so much and always want to give you that positive attitude because you can't handle the truth they say. That's the way they behave. We certainly can infer it for what they say and do. Nothing negative. Always prices are doing great and rates are coming down. You need to buy, or sell. Well, the reality is we still have a unholy mess in our economy. November didn't change that, and we see that all items less food and energy is at 3.3%. We go to all items, everything, and it's only 3%. There's very little difference between it, which means that energy is the only thing, and we see it right here, the only thing that's actually down. And that came with our November drill baby drill, but everything else is still out of whack. Food is 2.5%. All items are 3%. All items less food and energy are over 3%. What did the Fed chair say we would cut rates when we got close to 2%? Did we ever get close to 2%? I'll answer that one for you. No, we didn't. But we got close to an election and we cut the rates. And this is what we get. A respring of inflation. It's not awful, but we could certainly live without it, couldn't we? Can we go with a little something, a lower, slower increase of it, of this cost? Inflation? Could we not live with 2%? I could live with 2% better than I could 0%. And 3%, because there is sort of that little magic growth where our assets grow with it. We don't want it to be zero, but we don't want inflation to be out of control. And let's look back at this screen because we're going to read what it says. The CPI for all items raises 0.5%. Shelter up. Yes, housing is going up. It's not, I don't see that it's going to get any cheaper, but I could be wrong. Don't make a bet on what my impressions are. Consumer Price Index rose 3% from January 2024 to January 25. So, no, we're still not beating inflation. And what does that have to do? Because we have a meeting coming up in March, I believe. And according to NPR, and because they're government sponsored, they would never tell us anything wrong or anything like that. And they're not supposed to be biased. But February 11th, about a week or so ago, when we started hearing all this talk about rates are going to come down, rates are going to get better, everything's looking great, Federal Reserve Jerome Powell says there is no need to rush on interest rate cuts. Well, not with inflation over 3% when that's 50% over target, right? If we're looking for 2%, we're at 3%, we're 50% over target. We're not good. So I'll leave this article for you to read if you want at your leisure, and we'll go to the very first one that has some good news, which is it does look like the mortgage rates are dropping despite the fact that the Fed rate has not changed. It's still coming down. This was over a week ago on the 11th. Go back to the 11th. And on the 11th, it says, around this, where are we? We're at 7:10. Closest to it I can get, there's our 11. Actually went up after he spoke, but then immediately came down. And the weekly rates didn't reflect it at all. So what does that tell you? Sometimes you just don't know. That's Emily Latella, right? Sometimes you just don't know. But it looks like the rates are coming down. So whenever someone says, we got to get the money down, realize that there's a lot more to it than just what the people are trying to sell you something are. So anyway, that's the truth as best I can see it for this week. Let's get into our closing segment. Hello, I'm Delbridge of Benchmark Realty, Murfreesboro, Tennessee. If you are currently unrepresented and would like to know how to compare up to 3 properties side by side and room by room, then go over to my new YouTube channel, CallDelToSell. That's 1 L and Del, no spaces. Watch the demo on Real Scout and then call me and we'll set up your exclusive ad-free account today. Are you ready, Freddie? Last week, 2025, we had 22,423 opportunities in the Real Scout system. You know, you need to get in with me, get your account today. 3976 looks like from my little paper notes here. It went up, whereas the opportunities went down, and the ratio at the integer level between those two went up to 18%. Just meaning that we're having fewer choices on the market, but we're getting more things locked up, but they're being held on to just in case somebody needs to see it, in case something falls through. Now this week, 2/27/25, we have 22,472, which looks like it's a slight increase over last week, but not really significant, just a tiny bit, and 4046 on the under contract still, showing that also went up, and guess what? The rate did not. It stayed the same at 18% integer ratio between them. All right, well, I hope these little short updates are fine. I mean, we really can't do too much with market data unless we drill down to where your market is. It's like, what do we care about houses for sale in the UK? We don't live there. That's easy to see. But it also, that same logic applies to whatever's happening in California and Michigan and Boston. None of that stuff affects your life if you're not looking to buy there. So all of the economics that we're looking at regarding the housing, all of it is either influenced by the national, but it's set by the local, set by the local market conditions. So it's not bad to look at these global things and these national things, but we can't really get you much specific data until we find a place you want to look at. Then we can research it all the way down to the neighborhood. All right, that's it. Appreciate you. See you next week.